Good afternoon. Welcome to our webinar and thank you for joining us today for the launch of our 2018 UK Salary Guide. By way of a brief introduction, I'm Karen Young, Director of Hayes Accountancy and Finance in the UK, and I'm joined today by Tim Parker, Head of Employee Benefits at Panels Financial Planning, and he'll be talking to you today about engaging with your employees when it comes to benefits and well-being, an area that he's an expert in. To kick off, though, I'll be running you through some of the findings of our salary guide. Specifically for today, it's about those areas concerning accountancy and finance, employers and professionals. Please do feel free to use the Q&A function throughout the webinar, and we'll aim to take some Q&A at the close. And anyone we don't get back to during the course of the webinar, we will, of course, come back to you individually. So this is the fourth year that we've produced our UK guide, covering over 9,000 salaries across 12 specialist areas throughout the UK. It's based on salary information provided by 1,900 recruiting experts from across our 94 UK offices. As well as using our own extensive insight to inform the guide, we also launched a survey designed to ascertain employee satisfaction, employers' concerns, and gather general insight into the overall market. And this secured around 17,500 responses from both employers and employees, of which over 2,400 came specifically from accountancy and finance, professionals and employers. So to start with, let's set the scene by quickly recapping last year's overall UK findings. So in 2016, prior to the EU referendum, 62% of organisations expected their business activity to increase. 73% said they were planning to recruit, and there was a 1.8% average salary increase. And 62%, I'm still staggered by that, 62% of employees told us they were considering moving jobs. However, against a backdrop of continued economic and political uncertainty, and in the face of an increasingly tight labour market, we're here to look at how the employment market is faring for the accountancy and finance sector in the UK today. So let's take a look at what our results showed in more detail. So let's start with the positives. Employers are optimistic about the market and their businesses. Last year, 59% of accountancy and finance employers expected their organisation's activity to increase in the next 12 months. And whilst this has dipped slightly this year to 52%, it's just below the overall UK average of 59%, and still a decent number. Reassuringly, the vast majority of employers continue to expect activity to either increase, which is the dark blue, or stay the same, which is the purple, and that's on a par with the overall UK average. And overall, I think this is a very positive indicator about the health of the accountancy and finance job market in the UK. Of course, there's ongoing uncertainty. However, employers' business outlook appears to have remained pretty robust to date, and two potential reasons for this. Firstly, we see ongoing transactional corporate finance activity in the pipeline still across most UK regions, which helps to bolster confidence in continuing long-term investment and for jobs. And secondly, quite frankly, employers have a pragmatic need for accountancy and finance professionals to meet business goals today, and of course to meet those goals tomorrow. So reflecting the business confidence, employers' plans for recruitment have continued to grow. We looked at organisations' plans to recruit over the coming 12 months, and more than half of you stated that you were planning to recruit over the coming year. This is, of course, positive, but reflects slightly less intention to hire than the national average, which came out at 71% across our professional functions. This result was anticipated, however. Finance are never going to be the department, or rarely going to be the department, adding a lot of heads as a business strategy, and very similar to last year's result for accountancy and finance, which came out at 56%. Of those looking to hire in the next year, 48% state that they plan to hire permanent staff, and 21% to hire temporary, interim, or contract professionals. This may seem low, but there is also some crossover for those employers who are employing both. And what's important to measure is the intention to hire and the changing behaviours when recruiting either temp or perm. As you can see in front of you, in order to get an idea of these, we asked about the volumes of temporary or permanent staff that employers were expecting to recruit, with the result being that many expect to increase their permanent headcount, while the volume of temps at the time that we surveyed remained fairly status quo. Arguably, though, even in the last few weeks, we've seen a slightly different trend in the UK for finance temps, possibly influenced slightly by the multitude of organisations with December year-end needing some extra assistance, and indeed, of course, our holiday period. So let's take a look in more detail about some of the challenges employers are expecting. Starting with the maybe obvious, but still pertinent point regarding skills shortages. Skills shortages are ever present and intensifying in all industries, especially in more technical areas like accountancy and finance. 3/4 of accountancy and finance employers stated that they have experienced moderate to extreme skills shortages in the blue and the purple there in front of you, and of these 9% actually labelled them as extreme, with just 8% of employers stating that you haven't experienced any skills shortages at all. In addition, 76% of employers say that a shortage of suitable applicants is the top recruitment challenge for the coming year, and this is predominantly on par with other industries or functions which had an average of 77%. Looking at that in a bit more detail and seeing how it compares to other sectors, many of which are suffering similar shortages, to be fair. In fact, 77% of all UK employers say that a shortage of suitable candidates is their #1 recruitment challenge, and as you can see here, many are being impacted significantly. Looking more closely at the skills most in demand from accountancy and finance employers, technical finance skills, if you like, were obviously the most in demand, followed by leadership and management for finance, and it's not surprising to see data and analytics up there too. For those employers looking for skill sets that typically come with experience, looking to other approaches to hiring may be pertinent during these skills-short times. For example, hiring temporary, contract or interim workers could hold the answer to filling some key skills gaps in the short term in order to meet the peaks in your business demand. So what are people doing to fill skills gaps? Well, many employers are already looking at hiring on a temporary or contract or interim basis, but we've also seen recruitment of apprenticeships and increased use of recruitment agencies as means of overcoming immediate and medium-term skills shortages. Being able to offer apprenticeships in credit and collections, payroll, other areas of finance is, I believe, very important to the profession as a whole, and yet I still don't see enough employers considering this route with professional apprenticeships and the benefits it can bring for sustained skills development within your organisation. If you happen to be based, and you're on the webinar today, in London, Manchester, Liverpool or Birmingham, an organisation like Leadership Through Sport and Business, who we partner with, who put cohorts of apprentices through their AAT Level 2 before they commence a 12-month AAT Level 3 apprenticeship within your organisation, can be really useful to talk to, with plenty of advice and case studies and evidence from other organisations who've taken people through this route. So as you can see in front of you, 52% of accountancy and finance employees are considering leaving within the next 12 months, which is slightly less than it was last year. But another threat to the availability of skills in this industry is what we call candidate mobility. And many finance professionals are telling us that they are dissatisfied enough in their jobs to consider leaving within a year from now. Yes, this is slightly lower than the overall average for the UK of 55%, but it still presents a big challenge to employers, those of you looking to continue to develop your teams and hold on to those vital skills. And after all, I think I made this point last year, but if you currently have a team of 10, are you ready for 5 of those 10 to knock on your door tomorrow to let you know that they want to leave? And do you have a plan A, and indeed in these markets a plan B? As we learned in another report earlier in the year, What Workers Want, which some of you may recall, 19% of a professional's decision to remain in their job is based on their perceived availability of the career progression opportunities available to them. And this is second only in importance to salary. So employers do need to create an environment that looks after the long-term interests of their staff in order to retain key talent. And you'll hear a little more from Tim on the benefits piece shortly. So to that end, career progression must always be considered. Most accountancy and finance employees believe that their career progression is stifled at their current organisation, which is a potential concern, as 18% of respondents told us it was the single most important thing when considering accepting a new job. And also that therefore means it could be a significant contributor to employee attrition. Or, put it the other way, if you improve it, it's your chance to make a real difference here. And largely I believe it's down to lack of communication or lack of communication of the paths available to people, just simply not making it visible enough. But numbers matter, and whilst career progression is a concern, it's still salaries that are pushing most employees to initially search for other positions. Interestingly, the average salary increase within accountancy and finance across the UK in the last 12 months has been 1.4%, which is a little below the UK average of 1.8%, as you heard earlier. However, don't let this mask some of the areas where we've got both regional hotspots and hotspots by function. Regional hotspots for accountancy and finance salary increases this year were in the regions, with higher than average performance for areas in the east of England, the northwest, and Northern Ireland, as you can see here. Comparatively, London saw rises of 1.5%, but still commanded the highest salaries pound and pence basis overall. Arguably, you could say the regions are sometimes playing catch-up with a skill set that's no longer purely London-centric, indeed, if it ever was. Payroll, accountancy support and credit management actually saw the highest rises of any disciplines, with payroll, as you can see, seeing a definite spike over other areas. And this is really one of the biggest stories out of our salary guide for accountancy and finance this year. And we'll look at the main reasons for this in just a moment. If we look at it by job title or role, as you can see, the majority of the top percentage increases on roles belong to payroll, with payroll team leaders seeing salary offers which have increased by as much as 8.2%. So what are some of the potential reasons behind this spike in demand? Regulatory and legislative changes, IR35, gender pay gap reporting, pension automatic enrolment still ongoing, preparation for GDPR, all of these types of things mean that talented payroll professionals are being highly sought after due to workloads within departments. We've also still seen an increased desire in some businesses to move the payroll function back in-house, where many would have previously outsourced, and in particular this has put pressure on the sole charge payroller job function, which has also seen inflation. So as a result, payroll as a function has seen the highest pay inflation within the accountancy and finance sector at 4.2% against, if you recall, the overall accountancy and finance trend of 1.4%. Despite some growth in salary offers, salary dissatisfaction remains pretty high. So of those who say they're considering leaving their current organisation in the next 12 months, 28% state that it's due to their salary level, which is, albeit at least under the overall UK average of 32%. But in order to maintain employee satisfaction and increase chances of retention, employers do need to properly benchmark salaries to market rates and begin to quickly take action to investigate other means of increasing job satisfaction. And this leads us on to my final topic, work-life balance, and why employers should be looking more at balancing their employees' work and home lives. Back to the salary guide, and we found that 40% of all accountancy and finance professionals surveyed were unhappy with their work-life balance. Now, this is still under the 44% average that we saw for the UK as a whole, but it's a really important area to consider, particularly in a skills-short market, as poor work-life balance is a contributor to workplace stress and a threat to staff retention. Over a quarter of employees value work-life balance most when considering whether to apply for a new job, and this indicates the importance further of maintaining and further improving work-life balance for employees wherever possible. Compare this to the 16% of accountancy and finance employers who say that they promote work-life balance as a means to attract new members of staff, and you can clearly see a mismatch here in terms of engagement. What this tells us is employers are sometimes failing to recognise the importance of work-life balance, and that an offer of improving it can make a real difference to a professional and may be a very effective means of attracting the most in-demand people to your organisation. Likewise, however, if your employees' work-life balance isn't prioritised, you run the risk that it may be difficult to retain them. So we've gained a lot of insights from the guide. There is much that hasn't been included in this presentation, which you can get in the full copy of our guide that I'll come to at the close of the webinar. But I'll just take a few moments now before I hand over to Tim to summarise the key findings of our report. So overall, as we said at the start, the accountancy and finance sector looks like it remains pretty resilient, but new challenges are anticipated in the coming months. Both employers and employees are showing some signs of caution. However, overall, the function remains busy across the UK, offering continued opportunities for talented finance professionals. And of course, there's still continued candidate mobility, i.e. the appetite from your staff to move jobs potentially. So here are the 5 key findings from this year's guide. Firstly, we've seen that despite the wider economic uncertainty caused by the UK's decision to leave the EU, employer confidence in activity for the year ahead remains pretty positive. As a result of that forecasted activity, recruitment remains a top priority for most organisations, with a particular focus on hiring permanent employees, as you saw earlier. But acute skills shortages do look set to be the key challenge for employers. Payroll was just one example. And in order to meet business objectives and alleviate pressure on staff, many employers are and will hire temporary professionals, and many in accountancy and finance should and will place greater emphasis on training and developing their existing staff, showing them that career progression. And in such a skills-short landscape, employers need to consider how best to attract and retain top talent. It's clear that in addition to salary and benefits packages, a positive work-life balance and greater emphasis on job security is important to the majority of candidates. And Tim will touch on other benefits shortly in his section of the presentation. So what do we recommend for employers during the year ahead? Firstly, we recommend you make workforce planning a key strategic priority. It should be on the agenda of every board, exec, senior management meeting. Despite the positive sentiment we see from organisations with regards to current activity and plans, skills shortages remain prevalent in the market. So workforce planning must be a core component of every business strategy. Understanding the range of workforce solutions available and considering the most important and appropriate options and factoring in the elements beyond immediate people needs will help employers to put in place the most effective strategies for both the short and long term. This will enable employers to mitigate the effects of shortages while continuing to meet their ambitious activity targets. Secondly, investing in your employer brand to compete for talent. Ensuring that you've got a strong employer brand has never been more essential given how prevalent the skills shortages are. Competition for candidates has intensified, and as employers you should target your offering to appeal to the specific type of candidate you want to attract. A huge number of finance professionals and professionals across the UK told us they do look online at the company benefits offering before they consider hitting the apply button on a new job. So are you prepared to take the risk of the best candidate for the job not feeling inclined to apply because you don't have the benefits profiled appropriately on your website? Certainly something to think about. And having a strong employee value proposition is central to this. Salary levels need to be benchmarked accurately and positioned correctly, and progression opportunities and training investment needs to be publicised. Employees want to be able to get an insight into what it's truly like to work at the organisation, so that they can assess whether they might be a strong fit with your culture. So make sure you clearly promote any benefits your organisation can offer, which help achieve and maintain, for example, a positive work-life balance. More and more employees actively seek this information. You've got to have a transparent message. It's got to be easily accessible online. So considering videos, short clips, let people hear from the real people who work in your organisation. And then finally, utilising contingent workers for more than just projects. Employers' drive for growth is putting significant pressure on employees, and this is driven further by the high amount of skills shortages. So employers should reconsider the approach to hiring temporary workers. Whereas traditionally temporary contract and interim workers have been used to supplement projects where specific skill sets are required or to meet peaks in demand, they could be used to a greater extent to help alleviate some of the pressure from the increased workload. And this will help to ensure growth plans can be sustained and targets met and improve the job satisfaction of permanent employees and, of course, help to retain the key critical knowledge within your organisation at the completion of projects. So as I close with those 3 recommendations, and we'll obviously take questions and answers at the end, I'll now pass you over to Tim.
Thank you, Karen. It's quite interesting listening to that. A lot of it resonates because my two eldest children are both actually qualified accountants, and Alison had a job she enjoyed and loved it, and she sort of actually said to me a couple of weeks ago that she was handing in her notice, and I said, why? And she said, well, I can earn more money by going contracting. And I thought that was quite an interesting scenario, that the employer she worked for, she loved the job, great benefits, but actually the desire to get on the housing ladder and build up a deposit for a house was what made the decision for her. Good afternoon to you all. I work for Panels. We're a national employee benefits consultancy offering independent advice to employers in relation to their reward and retention strategies. I believe that reviewing benefits regularly is a must-do task for all employers in this ever-changing world. I'm going to show my age now, so Should I Stay or Should I Go is one of my favourite songs by The Clash, and a question that more and more employees are asking themselves in relation to their employment status. Pay and benefits go in hand, so it's vital that these help to create a desire and an overwhelming desire to stay put. Increasingly, culture, work-life balance, Karen mentioned that, and well-being have an important part to play. We all know that physically well employees that are free from financial worries will perform better, and more of them are demanding from you as their employer help in these areas to help their lives put on a better footing. So during my presentation, I'm going to focus on those areas. So when you're looking to review your benefits, I think it's also important to understand what you can't influence. And there are a number of things. So low employment means that the competition for talent is as high as it ever would be. Equally, we've got an ageing population and there's no default retirement age. So people working longer and later means that that's squeezing jobs in many areas. So it's important to look at, how can you encourage people in other ways. And of course there's Brexit. I think the biggest impact from Brexit often was the impact of the fall in sterling. Obviously that's meant it's a lot more expensive for people to come from overseas to work in the UK, although if any of you have got pension funds, you'll know that it had a huge impact on the investments of pension funds. So what can you as an employer do to sort of stop talent erosion? Well, I guess there's lots of things you can do, and I like to think of it just like budgeting. Lots of small changes can make a big difference, and it's essential to have a positive culture and have that as a goal so that you actually measure the things that you do. In my experience, many employees' grumbles relate to employers not walking the talk, so it's essential that your messaging is joined up. I think a very good example of this was an employer I was talking to recently that was having a fantastic year, and it had gone round during the year telling its all employees how wonderful it was, how the business was doing, how job security was great. But the one thing they got wrong was when it came to pay review time. Employees were expecting significant pay rises but didn't get them on the back of that good news story. And what that meant was it had a really sort of bad impact on the loyalty that the employees felt to that organisation. So be careful what you say and the messages you give and how it can impact. A good example of how we've improved our own culture at Panels, a couple of things really that didn't cost really any money really, or very little. The first one was to introduce flexible working. And that was a great benefit because it allowed people to have flexibility, especially around childcare, also travel efficiencies to work, and also work-life balance. In addition to that, we decided to give everybody the day off, their birthday, the day off. And again, that went down really well. It didn't cost our business much money, but it certainly did put a smile on everybody's faces. So little things are important. I personally believe that one of the biggest areas for an employer to address is financial well-being. It's probably the last taboo in the workplace behind mental health issues. A significant number of employees are struggling, and as we're all very British in this multicultural society, that sounds a strange thing to say, but we don't generally like to talk about our finances to each other, and we hide the fact that we're struggling, and people are coming to work and not performing well. A recent survey done by Neighbour called the DNA of Financial Wellbeing, published in May 2017, highlighted that 58% of people were suffering from money worries in the UK. Again, another staggering figure. And you as an employer can do things to help them through financial education and perhaps through responsible workplace loans. On a similar theme, research carried out by Barclays and Corporate Employer Solutions along with Liverpool University highlighted a massive disconnect between benefits and employee desire. 85% of employers in this particular survey stated that they were not satisfied with the benefits that their employer provided. An absolutely astonishing figure that really should, on its own, make you think, do we need to review our benefit strategy and make some changes? I think 2 or 3 examples around here sort of show you how this works, really. So, if you think of a single person, how excited are they going to get if they've got no dependents with the life assurance you provide, or with childcare vouchers? Equally, if you've got people approaching retirement, are they going to get excited about discounted gym membership? Perhaps some will, or career progression. So a vital part of any benefits review is the analysis stage, and one of the first steps is to understand your employee demographic from an age, gender, salary, and if you can, family status perspective. These will affect the value of the benefits you put in place receive. At panels, we use quite a simple tool, really, to look at demographics with the employers that we look after. And you've heard these terms before, but we segment people into the different sections like millennials, Generation X, and baby boomers. Each generation has their different needs. But a recent survey by PwC highlighted that actually, very soon, millennials will be the biggest proportion of the workplace, overtaking baby boomers. And that is a concern when we look at benefits strategy, because I think it's fair to say that most benefit packages have been designed by baby boomers for baby boomers. So there is a natural disconnect there. So again, a good business case for reviewing and changing the benefits you put in place. If you look at the slide there, competitive pay for the millennials, their top desires after competitive pay were financial education, followed by training development and flexible holidays. It's only when you get down to number 5 that you see traditional pensions in the form of pensions coming onto the list. And we all know as employers now, because all of you have to provide a pension scheme, that it's no longer the differentiator it used to be. And again, you need to look beyond that. A good example of that would be critical illness cover. I find it quite an interesting benefit, because only 10% of employers actually offer a critical illness scheme. A very low percentage, especially when statistics tell you that an employee during their working lifetime is 4 times more likely to suffer a critical illness than they are of dying. Despite this, most employers, around 87%, have a death in service scheme in place, and often cite the fact that, they don't have a critical illness scheme because it's too expensive. Well, I was again working with an employer recently. They only had 100 employees, and they said, well, what would happen if we just gave people one-time salary to help them if something happened like cancer, stroke, heart attack? And the cost of that was under £5,000. So you sometimes have to ask yourself that to provide financial support, like in this scenario, for 100 employees, a cost of £5,000 isn't expensive. It's probably, a third of the cost of a very low-paid hire, so something to consider. And if you look back in history, you may not know that actually this year, it was 50 years ago that the first heart-to-heart human transplant took place in South Africa by a gentleman called Dr. Christian Barnard. And it was his brother, Marius, a surgeon, who was appalled by the lack of support for people when they suffered illnesses, that actually lobbied insurers to actually put in place critical illness insurance. He referred to it as the financial doctor, helping people to stay in their homes, live with dignity, and continue to support their loved ones. I think it's a story well worth Googling if you've got 5 or 10 minutes to look into that. The other thing we need to bear in mind, and sometimes people look at this and say, oh, well, is there some sexism here? But actually, our gender does influence how we value benefits and how we sort of desire benefits. Research conducted by KPMG recently showed this, and it said, in terms of the millennial population, females really, their key driver was work-life balance above pay. But when it came to men, it was quite different. Pay was the top benefit ahead of things like work-life balance. Equally, when we get into financial worries, The survey done by Neighbour showed that actually women tend to worry more and lose more sleep because of financial worries than men. And again, even though you've got different genders in the workplace, it's important that you recognise their different desires and what might impact on their well-being so that you can adjust your benefits package accordingly. So, there are 5 generations in the workplace now, probably 6, but it's essential that if you're going to get the maximum amount of your spend on benefits, you diversify so that you can appeal to more and more people. A flexible approach is ideal, but far too often what I see happen is that employers review their benefits, but they never ever fundamentally change the design. It's never challenged. What happens is they review the benefits, and all that tends to mean is that they go out to market and they're quite pleased that they get lower costs, but they haven't actually changed the design. So the end result is you get what you've always had. People are still disengaged with the benefits in place, and that 85% figure hasn't been chipped into. If you accept that people are at the heart and soul of your business, then making time for a proper benefits review is essential. And look yourself in the mirror when you do this. Say, how much did we change at our last review, and what was the impact? Another area of benefits that is missed is benefits communication, and I think this is possibly one of the most important areas to consider and should be at the top of your list. You spend lots and lots of money on benefits, but how much do you set aside to communicate them in a simple and clear way? We see lots of examples of employers sort of talking about benefits, and then when we sit them down and say, can you list them all out for us, they can only list 2 or 3 of their own benefits, and perhaps that's something you should try in your own organisation. I personally believe that if your employees can't articulate the benefits package that you've put in place, that it's bordering on criminal, really, considering the amount of money you spend, and it's something to address. Equally, look at the benefits messaging you're given. You know, in my view, simple messages are the best messages, and to do that messaging on a little and often basis. I always think about emails when I think about communicating benefits, and I think about the emails I really don't like. You probably think of the ones that come into your inbox that are like War and Peace, and they've come with lots of attachments. And I think the challenge is that so many employers still communicate their benefits in that way, and perhaps another approach is needed. We tend to find, and it's not always practical, that face-to-face communications is one of the most effective ways to do this. Taking time out to do presentations, to make people understand what you're doing is essential. And I know actually that Hayes recently did that for their own staff on a national basis. And it's particularly true when it comes to pensions. If you think about pensions, people don't read their pension benefit statements. They're long, they're dull, and they're full of lots of technical jargon. And sadly, there is little appetite from the pension companies to change that. What employees really need is very simple messaging, like, you know, how much am I going to get, how much do I need to pay in, and how much is the state going to give me? Armed with very simple answers to things like that, it can become a lot more engaging. So I'm going to now sort of give you a couple of ideas just to review in your own organisation. And benefits, you know, come in all shapes and sizes, but one of the benefits that is often overlooked is your employee assistance programs. These tend to be overlooked because they're often free riders on other benefits like, I don't know, a group income protection or a group life assurance scheme. So because you're not physically paying for them, you don't communicate them. And if you haven't got an employee assistance program, for example, and you had 100 employees, you could put one in place for less than £1,000 a year for all your staff. But these give people the opportunity to contact people confidentially, 24/7, to talk through some of their issues, whether it's issues around health, whether it's issues around finances, or even bereavement and things like that. Again, talk to people, talk to your employees and make them aware of those benefits, because they do help, and they do help people get through very difficult times. Another one is responsible workplace loans. As an employer these days, there are a number of providers out there, and you can set up workplace loan access without costs. And I guess the key thing about workplace loans is remembering that actually in the UK now, employee debt is increasing, and it's estimated that employee debt in adult populations, excluding mortgages, is around £4,000 now. And a lot of that debt sits on credit cards with interest rates at 25 to 40%. So if you as an employer could help employees put some responsible lending in, maybe at single-digit loan rates, then that could be a really good benefit to put in place. The other one that Karen touched on was auto-enrolment in relation to payroll and the pay rises needed to attract staff. But for you as an employer, you may be facing very big pension increases in April 18 and April 19, as will your employees. But salary sacrifice is another area that you need to look to see if you can maximise. If you're not maximising salary sacrifice savings on pensions, then you could be losing out on a lot of, I'm going to say in inverted commas, free money. We recently helped a national charity when we reviewed their salary sacrifice pension scheme. They had just over 10% take-up, but they said they had a salary sacrifice scheme. By helping them, they're going to save now £200,000 by making the take-up on a negative affirmation basis. So don't lose out on those types of savings. So in conclusion, really, I think it's fair to say that keeping your key talented employees is essential. And if you can review your benefits packages to tinker with them and make sure that they reflect the generations that are in your workplace, you've got more chance of being successful. That said, when you're looking at communications, remember to review what you're doing and try and gauge the impact it is having on your employees. Tell them what you've got, tell them again, and tell them again. And make sure you set aside that communication budget to do things differently. So, again, thank you very much for listening. And now if you've got any questions.
Great. Thank you very much, Tim. So I'll open the floor up to any questions, either for myself or for the speaker, and I will hand back just at the close there, so that if you want to contact him directly, that you can see his contact details. So just looking through the questions, we've got one here: is there currently a high demand for finance employees, and if so, in what areas? So thank you very much for your question there. I think probably part of the presentation drew that out with the payroll numbers and information that you saw up on there. So payroll is certainly one. We're also seeing continued demand for good credit controllers and senior credit controllers within the credit management function. There's probably been a little bit more salary inflation in that area and continued appetite to hire. And there's always continued demand and a shortage of good part and newly qualified accountants, and continued appetite in particular from the private sector, but actually across the piece. And I think that comes as well from medium-sized organisations whose businesses are becoming probably increasingly complex. As much as we try and simplify business these days, I don't think there's probably an organisation that doesn't talk about big data nor try and drown in it daily. So the need for good management accountants, financial analysts, business partners to interpret that data and make it meaningful for business, I think. And then finally, audit risk and compliance professionals might seem quite a niche area to talk about, but again, we're seeing continued appetite to recruit in those areas. And look, we all know about the risks that can be involved with things like reputational damage. Look at the things that we hear and read about around the sort of proliferation of things from social media, etc. these days. So I think again we've seen probably higher than average salary inflation in that area, in line with demand, really. Okay. Is there anything you would add on that, Tim? Sorry, I've launched in.
No, I think that makes sense, actually. I mean, in the world of benefits, we're still seeing people in payroll under a lot of pressure around auto-enrolment, because lots of the micro-employers are going through that. And ultimately, that has had a knock-on effect to people's work-life balance. So actually, it makes perfect sense what you're saying. And I think sort of the work levels that people have been put under, now are at a stage where people are really saying, actually, it's almost a breaking point, and I do need to consider something else. So I think the need to reward people and have higher pay rises is important.
Yeah. Okay, thank you. Just a slight sub-question on that, I suppose. It's a question around the industries in which the demand for payroll professionals is high. I haven't got that, I'll be honest, I haven't got that data analysis right in front of me, but anecdotally, do you know what, it's across the board. So I mentioned that the increase in terms of sole charge payroll positions, so that's in medium-sized businesses reinvesting back in a payroll function in-house. So that's across the industry sectors. So I don't think there's any proliferation of any particular there. And in large companies, again, just thinking about the vacancies that come in day out in the business, it's service sector, it's telecoms, it's tech. It's still demand in the retail sector for payrollers to pay the retail sector, and whilst retail overall hasn't seen as much pay inflation for obvious reasons, they still have large volumes of people on their payroll. But I will come back individually to that person on that if you've got a particular interest in that. Another question, how can you tailor your employer brand to attract different candidates? I think that the question came in actually a little bit before your slides, Tim, so I'm hoping that some of the anecdotes that you gave may have answered that, but is there anything else that you would add, thinking about different generations and gender?
Well, I think the starting point is to sort of look at how you promote benefits at the very start of it, when someone actually goes to your website or something like that and looks at benefits. Because, again, what I tend to see is people just sort of talk about the traditional ones and say, actually, you get a great pension here, we pay you a good salary, and actually, if we think about the different generations, I think people these days accept that as a norm, and actually looking at the other benefits is where you can add value. So pieces about culture, well-being, things like charity days for fun and going out and helping, things like that are all important things to consider. And again, it is quite shocking how little of that is put out, firstly on a website, and also perhaps is not covered to enough extent in an interview with somebody as well. So I think there are areas where we think we could do more.
Yeah, and I think it's interesting just to pick up on your point around the start of your presentation, and obviously talking anecdotally about children and the choices that they're making. I know I'm starting to make different choices. I'm quite happy to share that I've put a fairly significant amount into a pension scheme for a period of time in my career, and then with the flexible benefits that we've got on offer at Hayes, I made different choices last week, around critical illness and increasing that because I'm getting older, and looking at private medical care for my partner. So I think that's interesting. In terms of brand specifically, how can you tailor your employer brand to attract different candidates? I think we know, I think Generation Z candidates place the highest value on career development when looking for a new role. Baby boomers instead focus on the sort of work-life balance. So I think it's just always playing to the fact that there's not one size fits all, as Tim said previously, and tailoring it across the board. With such acute skill shortages in areas like payroll, what can employers do to overcome these? I mean, I think that the point about apprenticeships was pretty key here, and looking hard at sort of training offerings to overcome the shortage in skills, especially given the role that training would have in helping career progression. So that, the training piece enables upskilling and reskilling of the workforce, but I think at an entry level, if you have got to recruit in payroll in 2018, and you're looking at recruiting a payroll clerk or payroll administrator, sometimes thinking about whether you could take on a payroll apprentice through the CIPP scheme, the Chartered Institute of Payroll Professionals, I think is a good thing to think about. Or indeed, if you can potentially look at some career development in terms of breadth of skill set within your organisation, maybe you could move someone from accounts payable, for example, one of the other transactional functions, and train them in payroll and help them to broaden their skill set, and help people with their career plan there. At a more senior end of the market, we saw the pay inflation that we'd had for payroll team leaders and supervisors, and again, I think things like the introduction of the level 7 apprenticeship, obviously, which is fairly recent news, enables you to think about different skill sets and levels and training at a different level within your organisation. So I think having that good training, thinking about apprenticeships, will help to really improve your employer brand as well.
That's true, and actually it sounds like the Parker family here, but my son Sam, he actually recently changed job, well not recently, within the last 6 months, and one of the things that he did change was for career progression, because what he wanted to be able to do was actually start to manage some projects and take some of the strategic decisions which he wasn't able to do at his original place of work. So he didn't move at all for an increase in pay, he didn't move for anything in terms of more benefits. It was all about doing more interesting work and work that he felt more suited to.
Thank you. Final couple of questions, I think, unless if you've not typed one yet, then do keep them coming through. So, Tim, at the start of your presentation, you talked a little bit about sort of measurement. How many, if you like, organisations do you see sort of measuring this well, and what would be a good example of where someone's done it well?
Well, I think sort of very large employers tend to do this well because they've got the resource to do that. So you look at national companies, they've got benefits managers, they've got a budget so they can do it very well. They're very serious about their communications. But once you drop down to sort of employers in the SME market, and we can all debate what an SME is, but you know, maybe 500 employees and less, it tends to become much more of a cost that's something they're not going to do. And there is the danger that that marketplace just loses out. So I would generally say that all the big companies you can think of generally do this very, very well. But the smaller employers are the ones that actually don't set aside time to do the proper planning, and don't set aside a communications budget, and don't monitor the results. And so they just keep doing what they've always done.
Okay, and that's interesting in itself. I think you look at a comment that the CBI made last year around the medium-sized businesses, in particular, the contribution that those organisations make to both the economy and to jobs. If those jobs don't have the right benefits attached to them, the risk would be that we've got a skill set that moves to potentially a large organisation. And I think it's key, you know, your point that people can only generally on test articulate maybe 2 or 3 of a list of maybe 15 benefits, comes back to the point of where people are looking online at benefits before they apply for a job. But also, if when tested they can only articulate 2 or 3, the chances are at interview, when interviewing a potential candidate, top talent to work for your business, you can potentially only articulate 2 or 3. Is that person going to choose your organisation over the one that can articulate it better? No,
I think that's very true. If you ever speak to any of your friends that are looking for jobs, or people you know, and you talk about benefits, their normal answer is, oh, they've got the normal benefits. And you say, well, what are the normal benefits? And then they struggle to tell you beyond pension, life assurance, medical, good pay, and then it stops. And so we are missing the trick in terms of getting those messages across that are going to help financial wellness and well-being.
Yeah. Okay. And flexible working you mentioned and I mentioned, so I think it's fair just to probably pick that as, I think, our closing question. You know, what examples, have you got any examples in terms of where you see that working well?
Well, I think if you recognise that work life and home life have pretty much merged into one these days. You know, if you go around your office and you look at people have always got their phone out tapping onto things. That you need to have a degree of flexibility, and technology means that people can work in lots of different areas. So I think we need to try and determine between agile working, where you can work anywhere, and maybe flexible working, where you might allow people to sort of actually work core hours of the day or outside core hours. Again, where we've seen it work well is where employers have recognised where people are travelling to work, that actually if they can change the working patterns, so for example they can catch things like buses and not have a half an hour wait for a bus, they can get to work at a different time, and they value that because they're using less of their time travelling. You know, so I think looking and understanding your employees and things like that is a really important thing to do.
I think that's really key, and I think there's a couple of examples. One was an example of agile working in a business in Manchester that had looked at agile working and decided to recruit the skill set that they needed, which was pretty sort of risk and analytics, and looking probably at millennials coming through. They needed to bring this in place. They brought that in and said, we will enable you with all the technology you need to work from wherever you want to. And they were looking at sort of future-proofing their business and the skills over the next few years. The risk in that has been obviously current population of employees who are different generations kind of saying, well, I'm not sure about that. I like coming into work each day and working these hours, and I've got a very sort of set routine. So I think, again, it's that blend.
And the social skills as well.
Yes, absolutely. And you know, we could probably do a whole different webinar on that. And then I think from flexible working point of view, again, sort of recent observations from being at a number of our face-to-face events with the launch of our salary guide and different conversations that have taken place in different locations has been on the flexible working point. One organisation a couple of weeks ago pointed out that they, again, had different generations doing different things, even with their own flexible working policy. So in that particular organisation, they saw the younger generation wanting to start later, maybe, and do 9 till 6. Maybe they stay up later than me, I'm not sure. And then, you know, probably people certainly of my age kind of saying, well, actually, it's more important for me to finish earlier, so I'd far rather come in at 7:30 or 8 o'clock and work those hours. So I think those are the key things. It's you know, one size doesn't fit all, and the flexibility and adapting that comes strongly through from your expertise.
Agreed. Yeah, agreed.
Great. Okay. Well, I think that's it for the questions. So thank you very much. I hope you found today's session a useful insight into how the UK economy, employment and recruitment are faring, in particular in relation to the accountancy and finance profession. I'd like to extend my thanks once again to our speaker, Tim Parker from Panel Financial Planning, for an excellent presentation, and to you all for attending the webinar. If you would like to request a copy of our salary guide, please speak to your usual contact at Hayes, or you can complete the form on our webpage, and we'd be delighted to look in more detail at what help your organisation might need over the coming year. And if I can just flick back a couple of slides, and I'll just leave Tim's details up there in terms of the organisation as well, that if there's anything in there that you particularly like to pick up on, I know, Tim, you'd be delighted to help.
No, absolutely, and I think the slides are going to be made available.
Yes, that's right. I think there was one question through around the slides being available. So, yes, we will make those available. So thank you very much for joining, and I hope wherever you are in this snowy country or parts of the country today, you have a good afternoon. Thank you. Bye-bye.